Welcome to Module 7, Refundable Credits. Here we're going to be talking about the Earned Income Tax Credit. By the end of this module, you will understand the Earned Income Tax Credit, or the EITC, understand how a taxpayer qualifies for EITC, know about the rules applying to it, knows what qualifies as earned income, know what income does not qualify for the EITC. This module is broken down into 7 topics. First, what is the Earned Income Tax Credit? Second, how a taxpayer qualifies for the EITC, what rules apply, what qualifies as earned income, what income does not qualify for the EITC. We'll do a recap and then we'll end with a knowledge check. What is the EITC? The EITC is a tax benefit that serves as a financial supplement for taxpayers with low to moderate working incomes, particularly those individuals with children. Millions of workers each year qualify for the EITC. The EITC is a completely refundable tax credit, which would indicate that the taxpayer may get money back even if no money is owed to the IRS. There are 2 main factors in calculating the amount of EITC, and they depend on the recipient's income and number of qualifying children. You can see below on the Form 1040 where one would see the refundable credits. The maximum amount of the credit for the tax year 2019 is $529 with no qualifying children, $3,526 with 1 qualifying child, $5,828 with 2 qualifying children, and $6,557 with 3 or more qualifying children. Let's learn about how a taxpayer qualifies for the EITC. In order to qualify for the EITC, an individual must meet all of the following criteria. First, they need to have earned income in the tax year. They need to have been a citizen or a resident alien for the entire duration of the tax year. Have a valid Social Security number for yourself, your spouse, and any qualifying child for the EITC. Investment income cannot exceed $3,600, and if you have no qualifying children, the individual must be at least 25 years of age, but under 65 years of age. In addition to the requirements previously stated, there are income thresholds that must be met. For the 2019 tax year, the earned income and adjusted gross income must not exceed the following thresholds: $15,570 if you are not claiming a child, $21,370 if you're filing jointly, $41,094 if you have 1 qualifying child, $46,884 if filing jointly, $46,703 for 2 qualifying children, $52,493 if filing joint, and finally $50,162 if you are claiming 3 or more qualifying children, and for those filing joint, it'll be $55,952. According to the IRS, your child must have a Social Security number. Therefore, those children with ITINs are not applicable, and they also must pass the qualifying tests. They need to pass the relationship test, the age test, and the residency test. For the relationship test, they need to be either your son, daughter, adopted child, stepchild, foster child, or a descendant of any of those previously stated relationships. For example, your grandchild. They could be your brother, sister, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of those relationships, so that could be a niece or a nephew. For age, the child must be younger than you and younger than 19 by the end of the filing season. Or, at the end of the filing year, your child was younger than you, younger than 24, and a full-time student. Or, at the end of the filing year, your child was any age and permanently and totally disabled. And finally, for the residency test, your child must have lived with you for more than half of the year. Let's talk a little bit more about income qualifications. Earned income can be classified as income that you've had to have worked for. Income that is generated from interest, rental income, investment dividends, unemployment, workers' compensation, and pensions will not count as earned income. IRS explicitly defines the following as earned income. Income earned as an employee on Form W-2, net earnings from operating a business, which you can find on Form 1099 Miscellaneous, 1099-K, and cash, and also some union strike benefits do qualify. The IRS has explicit classifications of unearned income. Here are some examples. Alimony or child support, unemployment or workers' compensation, any income that has been received while incarcerated, inheritances, gifts and gambling winnings, investment income, dividends, and interests. Let's recap. The Earned Income Tax Credit is a benefit for taxpayers with low to moderate working incomes, particularly those with children. The EITC is a refundable tax credit, which would indicate the taxpayer may get money back even if no taxes are owed to the IRS. Earned income can be classified as income you have had to work for. Income that is generated from interest, rental income, investment dividends, unemployment, workers' comp, and pensions will not count as earned income. There are qualifications that must be met by the taxpayer. You can reference slide 10 for the qualifying child rules. And the maximum amount of the credit for the 2019 tax year is $529 with no qualifying children, $3,526 with one qualifying child, $5,828 with two qualifying children, and $6,557 with three or more qualifying children. Let's end with a knowledge check scenario. Let's say Mr. and Mrs. Smith are a married couple with two small children. Their income last year was a combined $50,000 of wages. With their combined income and two qualifying children, their maximum EITC will be $5,828, which will be in the form of a refundable tax credit. The actual amount of EITC decreases with higher income. For the tax year 2017, the Smith's EITC would be $120. If their income had been only $40,000, their EITC would have been $2,226. Again, you can see this chart below, and that'll tell you the maximum credit amounts. So, for some additional resources, you can find out about qualifying for the EITC, the 2019 EITC limits, and you can always consult the publication 4012. Up next, Module 8, Tax Benefits for Education.